Welcome everyone, this is Steve Dahlia. I'm going to walk you through today's 22-minute class, so I'm going to move at record pace. Class is called Incorporation 101, Why Florida Real Estate Agents Should Consider Incorporating or Forming an LLC. Or, as I said in my advertisements, you give me 22 minutes, I will give you $5,000. Can't actually give you 5,000, but I'm going to show you how by spending 22 minutes with me today, you can easily save $5,000 by incorporating your real estate business. First of all, what does it do for you? What does incorporating mean? Well, it's designed to be a separate legal entity having its own privileges and liabilities, completely distinct and separate from its owners. It has certain legal capacities. It can enter into agreements or contracts. It can incur and pay debts. It can sue or be sued. And most importantly, again, it can be held responsible for its actions separate from the owner. So separate, that whole idea of separation is critical. If you're not incorporated, you're probably operating as either a sole proprietor or maybe you're in a general partnership. A sole proprietor is what most realtors are doing today before we get them educated on the benefits of incorporating. You're an individual owning a business alone and not as a separate legal entity. How much legal protection do you have in this case? Unfortunately, none. Why? Because your personal and business assets are combined. Everything's under one umbrella. In a general partnership, that's even worse because now you've got your personal affairs and your business affairs plus your partner's business affairs under the same umbrella. So what are your options? Well, in this country and in the state of Florida, as a realtor, you've basically got two options. You can be a corporation, and a PA stands for Professional Association. It is a form of a corporation. Or you can be an LLC, a limited liability company. With regards to corporations, there are two types. Number one is a C corporation. This is typically your larger entities like Burger King and Chevron. The owners of these large corporations, they still have that legal separation. They have limited liability, right? So think of the bank debacle of a couple of years ago, how banks did a lot of bad things, but no bank executives ever went to jail, although we're starting to read about all the fines that the banks got late last year, but none of the execs went to jail. Why? Because they're protected. They've got legal separation. They've got limited liability. So that's the good news with the C corporation. The bad news is they pay taxes and they're affected by something we call double taxation, which means the corporation pays taxes on its income when it earns it, and then their owners or their shareholders pay taxes again when they get dividends or distributions from the corporation. So the government is smart. They know that small business starting up is key to the backbone of the economy, and they knew that if realtors, independent associates, small entrepreneurs, if they were going to get hit with this double tax business, nobody would form new businesses. So they created something called a Subchapter S corporation. A Subchapter S corporation has all the benefits of a C corporation, except it's got a major differentiator, and that is that the S corporation itself does not pay any taxes. It has something we call flow-through tax treatment. So what that means is you do your tax return at the end of the year. If hopefully you have a profit, that profit, your corporation, your S corporation, doesn't pay taxes on that money. That money flows through to your personal income tax return, where you're likely paying at a lower rate, and we're going to show you how you don't pay self-employment tax on a chunk of that income, which is where that $5,000 I promised you is going to come from. So we talked about how this was the government's incentive to start small business. The other option is an LLC, which is sort of like a hybrid between that sole proprietor or partnership and a corporation. The owners also have limited liability, and they also have the flow-through tax treatment. DBPR says you, as a Florida realtor, can be either a PA or an LLC. So what's the difference? Well, if you look at them on this screen here, they're very similar. They both create a separate legal entity from the owner. The owners have limited liability in both of them, and the owners can have pass-through tax treatment with both of them. The only difference is in the PA, which is a corporation, the owner is required to hold an annual meeting every year and to keep minutes of that corporate meeting. But guess what? That's silly because DBPR says you can be the only individual owner of your entity. So that's right. You have to call a meeting together for yourself and you have to keep minutes of that meeting. So kind of silly, but the bottom line is that's the only difference between a PA and an LLC. Chances are you're doing this anyway when you sit down and you do your annual planning for how much you want to grow your business. You're probably putting together a business plan. Just sign it, date it, put it in the file. If you're ever sued or audited, then you have it. So, given that, the trends that we see in Florida are a vast, overwhelming majority of realtors who choose to form a legal entity choose the PA over the LLC. Two big reasons why they do this. Number one, it's less expensive. The state filing fee is $70 for a PA. It's $125 for an LLC. So realtors love to save money because so many people have their hands in your pocket. You like to save where you can. But I think the bigger reason is realtors like having that PA after their name because there's only four other groups of professionals that can use the PA designation after their name in a professional corporation. And in addition to realtors, well, you see two of them on the screen here, doctors and attorneys, and the other two are accountants and architects. So realtors like to be in that exclusive group and pay a little bit less money to form their entity. So that's why we see the vast majority of PAs. So what are the benefits? We're going to talk in the short time we have here. I usually do this class live in broker and association meetings, and it takes 90 minutes. So I'm cutting it way back. So we're going to blow through this pretty quick. Main benefits: personal asset protection, tax savings, additional credibility, and lowering your risk of an audit. So we know we live in a litigious society. I live in South Florida. I drive around the state doing this presentation, and I've lost track of the number of billboards that I've seen of lawyers that want to get me or you or anybody to sue somebody for something that was done wrong to them, right? So it happens all the time, and unfortunately, realtors do get sued. There was an article Rice Insurance Company did out of Texas a few years ago. It showed the top 10 reasons why realtors get sued. So protecting your personal assets is sort of important. You're separating them by forming the legal entity. And if we do your corporation for you, which I'm going to give you an option to take us up on that with a little discount at the end of this presentation, we provide something called a corporate veil guarantee. Now, a corporate veil is nothing more than an imaginary wall between your corporation or your corporate assets and your personal life, all of your personal assets, your home, your car, your life savings, your retirement, your children's college education fund, so that if something should ever happen in your business and you get sued, they sue the corporation and your personal assets are protected because they're hidden behind the corporate veil. Our corporate veil guarantee states that if we do your filing, we handle the paperwork with the Secretary of State. You become our client. You follow our step-by-step guidelines to keep your corporate veil strong. If you're ever sued and found personally liable, we provide up to $50,000 in legal defense fees. So pretty nice little perk. Okay, main reason why most realtors incorporate is the tax savings. In the middle column, we're going to show you the tax implication of how you're doing it today. On the right-hand column, we're going to show you if you are incorporated. We had to pull some numbers out of the air, so we chose $60,000. When you first do your taxes, the first thing you have to pay is something called self-employment tax. 2.9% Medicare, 12.4% Social Security, or a whopping 15.3%. In this case, it's a little over $9,000. This filer is married in the state of Florida, so there's her tax implication. Total tax bill, $20,000. Whoops, I jumped the gun there. Okay, now the benefit of having a entity is the government allows you to pay yourself in two ways. You can take a salary. Matter of fact, you have to take a salary, and that's subject to that self-employment tax that we covered on the front. But you don't have to take all of your income as a salary. You can take some of it as a distribution. So in this example, we took only 40% of our income as a distribution. Let's look at what that does to our self-employment tax. Brings it down from $9,000 to a little over $5,000. The federal tax portion stays the same, but the tax bill goes down dramatically from a little over $20,000 to a little over $16,000, or a tax savings of $3,672. So now that was at a 40% distribution. Some of the people in the marketplace, this is another example where I just switched the numbers and I gave myself a 60% distribution. So you see I flip-flopped the numbers on the top. Instead of taking $36,000 in salary and $24,000 in distribution, I flip-flopped it. So what does that do? It makes the amount of self-employment tax I owe a lot less, and it makes my savings go up to over $5,500. So now we didn't do anything. We didn't get additional tax write-offs. We didn't do anything. All we did was form a corporation and take a chunk of our money as a distribution, which is what the IRS allows us to do. So I'm obligated now to get you off this call in 11 more minutes, because that would be the 22 minutes, but that is where your $5,000 comes from. But we're not done. Let's talk about a couple of other things. First of all, just to be completely compliant on that $5,000 savings, people hear distribution, they hear salary, they think they've got to pay themselves a check every 2 weeks, they think they've got to wait 90 days to take their distribution. No. You have a closing today, you get your check today, it goes in your account today, you spend your money today. Every dollar you earn as commission is fully available to you as soon as it comes in. You just allocate some as salary and some as distribution. Main point is distributions are exempt from the self-employment tax. So whatever you're going to pay yourself on that distribution line, check with your tax advisor. Just that's the amount that you don't pay 15.3% on. So your tax savings are real easy to calculate. And now people see that and they go, well, I just pay myself 100% salary. 100% distribution. Doesn't work that way. IRS says you must pay yourself a reasonable salary. What is it? They don't tell you. Again, it's up to you and your tax advisor to determine that. I follow a gentleman by the name of Sandy Botkin. He does some work with Florida Realtors too, and Sandy says 40 to 60% is a safe zone. So that's why I showed the two examples. All right, what else do you get? Well, don't forget, you get to put that PA or that LLC after your name. And do you know, when people see letters after your name, they just think you're smarter and more educated? So let's take advantage of that, right? In real estate, everybody works hard to get special designations. Well, that PA or that LLC after your name can say as much to a prospective buyer or seller as a fancy luxury home marketing, distressed property, or any other real estate designation you might get. And what we see is when realtors go ahead and add that to their business, they go ahead and throw it on all of their marketing materials. Last benefit, then we're going to talk about the, how much does it all cost? How do you do? What are some of the things you have to do afterwards, etc. By having a corporation, you will significantly reduce your chances of being called in for an IRS audit. And when I say significantly, I'm talking to the order of 10 times, right? So here's an article that the Wall Street Journal did back in 2011 where they talked about how you're 10 times less likely to be audited if you have an S corporation. Couple quick reasons behind that are when the IRS decides to audit a company, they have to use a CPA, more expensive than a staff accountant. Corporate audits are more involved, so now they've got a more expensive resource doing a more involved audit. Lastly, you might be earning $250,000 in real estate, and everybody on this call would probably agree that's a great year. But guess what? To the IRS, that's the smallest of the small businesses, so they just tend to do less of them. Okay. Now I want to talk about what are the steps that you need to do if you want to form a corporation. Now, whether you want to have us do it, and I'm going to walk you through the process. So I'm going to put up on the screen right now a little download now button. So you can go ahead and click that button that I just popped up on the screen, and it will download the Florida order form for you, which is what I'm going to walk through right now. So even though I'm at the 15.5 minute mark and I got to get out of here in 7 minutes, I'm going to give you a second to go get that form and download it and print it. Okay, so how come realtors are not incorporated? Do you know only about 10% of Florida realtors are incorporated? And there's so many benefits, it just blows my mind. And the reason is they didn't know about it. And by the way, I can send you a link to the hour-and-a-half version of this presentation if you really want the nuts and bolts details. So just email me afterwards and I'll make sure I get that to you. But the main reasons why realtors haven't done it is A, they haven't had a chance to take a class like this. And even when they do get educated, they realize, my goodness, it's expensive. Attorneys charge between $400 and $800 sometimes. And they're also afraid of what they fear is the potential complexity. They think it's multiple months, bank statements, multiple years, income tax returns. No. For us, it's just that one-page form. It's front and back. If you print it out, it'll print across 2 pages. So we've made it simple. So again, whether you're going to fill this out now and send it back to us to take advantage of the discount I'm going to give you, or if you're going to have your attorney do it, the information on this form is what the Secretary of State needs. So please print it out and take some notes. Here we go. First thing you need to do is you need to name your corporation. Guess what? In Florida, that's easy. DBPR has already picked the name for you. The name of your business must be the name as it appears on your Florida real estate license. So if your middle name is on it, it must be first, middle, last, comma, PA, or comma, LLC. So it's your name as it appears on your Florida license, comma, PA for most people. 100% of the people on this call, I would suspect, would choose Florida as their state. 99.95 people on this call will likely choose a PA because almost 100% of realtors do. If you want an LLC, completely up to you. We don't care. We set them both up, but you would just choose a PA or an LLC. Purpose of your company. DBPR says that if you want to form a PA or an LLC, fine. But all you can do in it is what you got your license for. So you can only do real estate services for the purpose of receiving commissions from your broker. So number 4 would be real estate services. Number 5, this is for LLCs. Just how long, who will run it and how long will you keep it in business? Almost everybody who fills this out checks the top box to both of them. Most of you on this call will probably be corporations. This section deals with the quantity and share and value of shares. Most people just check yes to the top box. These are the default numbers by the state of Florida, so we just leave them alone. We can't sell shares in this company, so we don't need to mess with this. Section 7, who are you? What's your address? The only stipulation here, DBPR says that it must be a physical street address, so no P.O. boxes. Please write legibly your name, address, phone number, and email address. State doesn't need your email, but we do to communicate with you. So make sure you put that on there and then just check the owner box on the bottom. So here's what we do if you decide. I'm at the 19-minute mark. I've got to sprint to the finish line here. We do the corporate name search. We do the electronic filing with the Secretary of State. We get the articles from the state. We review them, check them for accuracy and completeness. Then we deliver them to you in an online tool called the Compliance Watch service. We talked about our corporate veil guarantee. We've got about 8 partners that want to give you goodies. And when you submit your order to us and your credit card is charged, we send you a link to all those partners and their special offers. They're things like free business cards, free 2 months emailing system, and a bunch of other goodies. For all my clients that register with me, I send you the next steps, and then of course we act as your registered agent for 6 months. So here's how the pricing works. Our service fee is normally $99 and the state filing fee is $70, so that's a total of $169. Because you took the time to join us on this presentation, we give you a courtesy discount of $25. Unfortunately, it is only good for today. So please make sure you get that form over to us today if you want to take advantage of that. Otherwise, we can do it at any time, but it would be $169. You do it today, it's $144, and then $199 for an LLC, because as you can see on the bottom, the filing fees for the state, the LLC is a little bit more expensive. Then you do have some ongoing fees to run your business. State of Florida charges, it's a fee, they call it an annual report. And for a PA, it's $150, and that's due every year by May 1st. Okay, couple things you need to do after you get your articles. You got to get your tax ID number so you can file online for your tax ID number. Real simple. Go to irs.gov, type in EIN on the top right search box. Up comes the form, fill it out. It's about 5 pages, 5 screens you have to navigate. Real simple. Next thing you want to do is you want to update your license with DBPR. It's Form 16, and they charge $30, where you'd be adding a PA or an LLC to your license. Next thing you want to do, possibly the most important, you want to file Form 2553 with the IRS. This is where you tell the IRS you want to get treated as an S corporation. If you don't do this, you'll be a C corporation and you'll get hit with double taxation. Next thing you want to do is open a business bank account, and then last but not least, update your W-9 with your broker. So I've got just under 22 minutes, so I'm going to leave it there. Again, if you want the hour-and-a-half version of this class, just shoot me an email and I'll send you a link to a recorded session we have. But thank you so much for giving me 22 minutes of your time today, and I hope you take advantage of the benefits that the state of Florida allows you as a real estate professional to have, and you decide to form your corporation and stop overpaying in taxes. Thank you so much. Have a great day.